It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey there, welcome back to Trading Stocks Made Easy. It is I, Tyrone Jackson, the wealthy investor. I have good news and I have bad news. It's tax time. That's the good news. The bad news is it's tax time again. Well, what does that mean to you and your trading account? Well, here's one of the things that I find that's really interesting. People love trading. Who doesn't like making money when stocks go up, go down, or stay the same? Otherwise known as bullish when stocks are rising, neutral when the market's not going anywhere, and bearish when stocks are going down. The thing about your trading account, if you're following the right trading strategy, you're always making money every week and every month. I love teaching covered call writing because no matter what the market condition is, it brings in money. Now, on a lot of these fancy shows, if you ever watch Bloomberg or CNBC, you frequently hear of all these traders who make $30 million in bonuses. Now, I understand why they make $30 million in bonuses because trading stocks really is a skill, and there are different skill levels based on the amount of money that you're managing. But all of the money that you earn for either a firm or for yourself is taxable. So in this quick episode, I just want to remind you that even though you're having fun clicking, or trading stocks from home, all of that money that you actually earn, well, you have to pay your uncle. You know, your Uncle Sam, whether you like it or not, by the way. So I see a lot of my students who have $100,000 tax bills. Now, if you have a $100,000 tax bill from trading, you probably earned $300,000. So you know how I'm always talking to you about your consciousness and your money beliefs? Well, I watch people change their consciousness, who then change their money beliefs, who then change their realities. They love making that $300,000. But in your first year as a big-time six-figure trader, if you forget to add in the tax reality, it's going to hurt you in March, April, or May, depending upon when you file your taxes. So in this episode, I want to remind you that all the money that you make as a stock market trader, it's real. And the tax bill that you're going to receive is also real. So here are a couple of ideas you may want to embrace and incorporate into your trading style. Number one, when the market is going down, we sell way out of the money cover calls, which really still brings in income, but it is taxable. Out of the money cover calls that are 30 days or less are taxed as short-term capital gains. So that's number one. Remember, if you are selling covered calls that are way out of the money, you are generating income and you have to pay taxes on that income. Your broker, by the way, is not responsible for the taxes, just sending you a statement at the end of the year saying, well, after all those trades, here's what you have to report to the government. So you need to keep a tax consciousness all year round because those short-term capital gains are your responsibility. So everyone's tax situation is totally different. Today, I'm talking about those of you who are making six figures trading, who feel like it's all fun and games until someone gets hurt. Number two, you should have a tax strategy. So let me give you a couple of ways to deal with taxes. If you're in the TD Ameritrade platform, they will actually deduct taxes for you if you call them and ask them to withhold capital gains or tax your dividends. They will actually do withholdings for you. Okay? All right. So your tax strategy should be one of two or three things. Number one, when you're trading and you add up your gains at the end of the month, take a third of what you've made and move it into a separate account. It could be a separate account at TD Ameritrade, by the way, just an account that you're not trading that represents the amount of money that you owe. When do you move that money into the account? That would be at the end of every month. You take a third of what you made and you move it into your tax account. When I say tax account, that's just a term that we're going to give that account where you're moving the money into. It's not an official term, so don't get caught up in that. The other way to do it is every quarter. January, February, March, add up your gains, take 1/3 of that and move it into a tax account if you don't want to do it every single month. Okay? Number 3, and this is the hard way, you add up your capital gains at the end of 12 months. When you're greedy, you don't want to move any of that money out of your account because it feels like you get to keep it all. And the truth is you don't. So at the end of December, you would add up all your capital gains for that calendar year, take 1/3 and move that into a tax account. If you are not willing to be disciplined and be responsible with paying the government their share, whether you like it or not, then you should not be trading. Trading in a bull market produces a lot of fast money. But with that responsibility comes what? A tax bill. Now, we talked about short-term and long-term capital gains. When you hold shares for more than 52 weeks and then you sell them, you pay a lower tax rate. Now, the tax rate between short-term and long-term capital gains isn't all that radical, but the government does charge you less taxes on stocks that you hold for more than a year. Still taxable, but at a lower rate. And you see, when I talk about these nuances between short-term and long-term capital gains, this is why you need to be working with a tax professional. Because a tax professional keeps track of the changes in all tax laws to make sure that you don't overpay or underpay your taxes. But remember, while you're in there clicking and cover call writing and volatility trading, well, you do have to pay the government a portion of those profits. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Today, we're talking about taxes here on Trading Stocks Made Easy, and depending upon your perspective, this is either good news or bad news. I'll let you decide on that. All right, so we were talking about the difference between short-term cap gains and long-term cap gains. Even if you don't understand what that means, use this show as a form of education, and guess what's going to happen? Now you can sit down and have an educated point of view when you talk to your tax professional. A lot of people say, I don't want to pay a tax professional all that money. I'll just do it on a piece of software. Well, you know what? When the software gets your tax liability wrong and you mail that into the United States government, do you know what happens when the government finds that error? They hit you up with interest on the money you should have paid. And that could be 8 months after you file. Why not just pay a professional and let them do it right? Because, speaking from experience, you could get a tax bill that is thousands and thousands and thousands of dollars because you were making all that money that year. So when I pass on a piece of advice to you, it's not just an educated guess. It's because I've learned from my experiences. Okay? All right. Here's another part of the good news. The money that you earn at your job is referred to under the tax code as earned income. The money that you earn trading is referred to under the tax code as unearned income. Did you know that unearned income is taxed at a lower rate than earned income? That's right. People who work for a living pay a slightly higher tax rate than people who trade or derive 50% or more of their income from trading. Right, because most of the tax laws in this country favor the wealthy. Wow, I wonder why. Because the wealthy vote, they contribute, and they participate in choosing their leaders. So, as you elevate your consciousness and create more financial success, there comes more responsibility. Now, if you've ever raised kids and bought a car for them, I know I have, I always said to my kids, this car is going to bring you freedom, but it's also going to bring you responsibility. Things like oil changes and gas, right? That is your responsibility if you want all this freedom. Well, it's the same thing with financial freedom. Financial freedom is wonderful because it allows you to take great vacations and help people by giving money away, but it does come with its own responsibilities. So, know your responsibility on the tax side. Now, for those of you who are trading actively in a retirement account, you're either trading in one of two types of account. One is a deferred tax account, like a regular IRA, or a tax-free account, like a Roth IRA, okay? Most of you are trading in tax-deferred environments. Now, what does that mean? You don't have to pay any money on those trades until it's time to retire. Why are the rules set that way? Because wealthy people vote. Wealthy people fully participate in our system, and that influences lawmakers. So enjoy trading in your tax-deferred environment. And if you are choosing great stocks within the Dow Jones Industrial Average and the S&P 500, you can grow your tax account into more than just 7 figures. I see it happen all the time. And if you're educated, you can not only produce a 7-figure account for you, but also for your spouse. Can you be a millionaire or multi-millionaire when it's time to retire? Yes, a few people actually achieve that every single year. But here's the deal. You can't do it without the right financial education. The way you retire a millionaire or multi-millionaire is by constantly making contributions to your long-term retirement account. Now, I know many of you actually let professionals handle your money in the retirement account. And, well, quite frankly, I'm against that. Why? Because I'd rather you actually own and invest in Dow stocks that pay dividends, and you're not charged anywhere near as much in terms of fees. You see, the fees we pay someone else take away from our retirement. Whereas, if you learn how to trade your stocks, you reduce your fees and increase your income, which should be your goal anyway. In the last episode, I talked about fearing less, just a little bit less, paying less fees, educating yourself financially so you know exactly which stocks to choose under the right market condition. All right, here we go. Are you ready to accept the tax challenge, which is have a professional start preparing your taxes and learning a little bit more about your trading styles and capital gains? Well, you should. The more you know about your tax responsibilities, the better trader and investor, stocks you're holding for the long term, you will be. Okay? And also, by the way, remember, dividends, which are distributed on a quarterly basis, well, they're also taxable. Don't worry about taxes. Get your strategy right. Get your mind right. And you have a shot at retiring with $1 million or more. Hey, that's my positive word for the day. It's Tyrone Jackson. As always, I'm really, really happy that you come and spend this time with me. And I hope that you reap the benefits of getting the right financial education. See you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.